Howdy, everybody. Welcome to Liberty Call. Today is Monday, September 9th, 2024. Hope you're having a great day. I'm Raymond Dahlman, your humble host here. I forget to say my name half the time, but it's right here on the screen, right there. So anyways, hope you had a great weekend. I got a lot of chores done, cleared a bunch of scrub oak, which if you've never lived in an area with scrub oak, it is a nuisance. It keeps growing back. It's the third time I've removed it from this spot in my backyard because next spring, I want to put up a chicken coop and some raised beds. And, it's in the way, and I've cut it out several times. I got a big old pile here in our neighborhood. They come around twice a year and pick up all the slash and branches and stuff that fall and you cut down. So anyway, so I am sore and tired. Got my workout in today. So if I'm a little sweaty still, I apologize. All right. Well, before we get started, if you could do me a favor, yes, you in the brown shirt, if you could give me some thumbs up, a like, a share, subscribe, a follow, and press the notification bell. All right. Markets were in a good mood today. Don't know why, but they were in a good mood. Dow Jones was up 1.2%, 484 points, closed at 4829. S&P 500 up 1.16%, 62 points. Closed at 54.71. NASDAQ up 1.17%, 195 points. Closed at 16,886. The VIX fell 12.51% today. It's at 1958. Canada up 1.08%. Brazil up 0.15%. And Mexico only up 0.06%. In Europe, Germany was up 0.71%. The UK up 1.09%. France up 0.99%. Netherlands up 1.03%. Spain up 0.89%. Italy up 0.9%. Switzerland up 0.46%. And Portugal up 0.83%. So it looks like most of Europe was up about 0.5% to 1%. Russian exchanges both green today. Big jumps there. MOEX up 3.02%. RTSI up 2.38%. And the overnight's not so good. The Nikkei was down 0.72%. Australia down 0.32%. New Zealand flat at 0. In China, the Shanghai was down 1.06%. The Shenzhen component down 0.83%. China A50 down 1.22%. DJ Shanghai down 1.1%. Hang Seng down 1.42%. And the Taiwan weighted has not been open since the 6th. All right. So that is the markets for today. So I guess, like I said, domestically, things just were, off like gangbusters. I'm looking at my calendar. I'm like, well, what's going on today? Maybe we'll see something here in our data or in our weekly update that'll tell us. Probably some data that's coming out later this week. All right, so the weekly update for today, stocks fell last week as soft economic data rattled investors focused on the Fed's next move with interest rates. The Dow lost 2.93%, the S&P 500 dropped 4.25%, NASDAQ was down 5.77%, and overseas markets fell 2.91%. Economic data unsettles investors. The 4-day trading week got off to a rough start as weak manufacturing data reawakened recessionary fears. All three major averages were down for the first session after the Labor Day holiday. For many, it was reminiscent of August 5th when stocks tumbled as recession worries unsettled investors. Attention shifted to Friday's jobs report as stocks traded narrowly. Markets initially reacted positively to news that job growth rebounded slightly and unemployment ticked down. However, selling pressure increased as the trading session progressed and investors digested the underlying data. The S&P 500 had its worst week since March of 23. And I remember covering the unemployment data last week. I didn't remember it going down. I remember it staying the same. So maybe I need to go back and check on that. All right. Fed's focus on Fed's September meeting. The Federal Reserve seems poised to make a tough decision regarding monetary policy in its September meeting. The jobs market and other softening economic data have quickly overshadowed concerns about inflation. However, there's still a case to be made for a soft landing. Job growth in August was slower than expected, but 142,000 jobs were created, an uptick that some would argue is an overall positive despite missing expectations. The drop in unemployment rate to 4.2% bolstered the soft landing narrative. Market observers anticipate a 0.25% rate adjustment in September, but some contend the Fed may consider a more significant move. On Friday, Fed Governor Christopher Waller said he was open to a larger move if necessary. Chicago Fed President Austin Goolsbee, who's a complete moron, so anything he says is just stupidity, and New York Fed President John Williams commented similarly during the week. Key economic data this week. Monday, we have wholesale inventories and consumer credit. Wednesday, the consumer price index and the EIA petroleum status report. So when the CPI comes out again on Wednesday, that's the last. And then we also have the producer price index on Thursday and jobless claims. And Friday is consumer sentiment and import and export prices. So we've got the two major, inflation metrics, the CPI and the PPI, Wednesday and Thursday. And then, of course, we got the meeting next week for the Fed. So I would imagine that people are going to, well, whether or not the numbers are accurate is another thing. But, I think this is probably going to set the stage for where the markets are going to go over the next couple of weeks. Companies reporting earnings this week: Monday, Oracle; Tuesday, GameStop; and Thursday is Adobe. All right. So that is the weekly update. Feel smarter out there? Yes? No? Maybe? Okay. All right, let's get to the market recap. S&P 500 rebounds after slump last week, shrugging off Apple's weakness. The S&P 500 rallied on Monday, recovering from its biggest weekly slump since 2023, driven by dip buying in oversold conditions and anticipation of monetary support. Analysts at Vital Knowledge noted that the rally was not fueled by any specific news, but by broader market dynamics. Apple Inc. declined over 1% despite unveiling its latest iPhone models and generative AI software. Apple Intelligence, the new iPhone 16, is expected to start at only $799, with the 16 Plus model priced at $899. Apple Intelligence is set to launch in October alongside the redesigned Watch Series 10 and AirPods 4. Investors watch closely for signs that Apple's AI venture could spark an upgrade cycle for iPhone, but the stock failed to gain momentum. Key inflation data, including the CPI and, it's like I got a burp, but I don't want to do it on don't want to burp into the microphone. All right. The consumer price index and producer price index for August is set to be released later this week. We just talked about that. These reports are expected to influence the Federal Reserve's decision on interest rate cuts at its September 18th meeting. UBS warned of a potential upside surprise in core CPI, particularly if hospital prices increase. Currently, there is a 73% chance of a quarter point cut and a 27% chance of a 0.5% cut, according to the CME's FedWatch tool. Boeing shares rose over 3% after reaching a tentative agreement with its largest union for a 25% wage increase, because that'll help inflation, which could prevent a strike. Additionally, Planeteer Technologies and Dell Technologies rallied after being added to the S&P 500, replacing American Airlines and Etsy. For most of these companies that are bitching and moaning, for the wrench turners and the knuckle busters and the folks out there who want bigger raises, especially those union folks, electricians, things like that. If these companies got rid of all the fluff in their companies, it's kind of like the school system. Back when I was in elementary school at good old Whitcomb Elementary in Clear Lake, Texas, it had, K through fifth. I was there from fall of 79 through the spring of 85. And, the office had you had your principal and your vice principal. And I think each one might have had a secretary. And then there was someone at the front desk. And then we had a nurse. And that was about it. And a librarian and a janitor, Mr. Jesse. So 8 people ran an entire school. Granted, you have all the teachers, but there weren't all these extra things. And then that's something I really noticed a lot when my kids went through school. My youngest is going to be 27 this year. There were all these administrative jobs. You go in the office, it's full of people. It's like, there's where all your costs go. All these teachers, and I had a post on my personal social media last week. It's like, it's the administration, teachers, the teachers have gone up slightly with the increase in population, but the head count of administrative and back office and all that type of stuff, that's what's killing everything from the medical system to, most businesses, they have all this dead weight. Fire them all. Your companies will run a lot more smoothly. Anyways, there's my free business advice to anyone out there who's listening. So, all right, next up, got an article here from Zero Hedge. Inflation expectations rise over medium term as delinquency fears unexpectedly hit a 4-year high. All right. Federal Reserve is increasingly focused on their jobs part of its dual mandate, believing inflation is under control, which, maybe. Despite rising concerns about that inflation could pick up again. The report from the Federal Reserve Fed in August highlighted these concerns, showing that inflation expectations at the 3-year horizon rose from 2.3 to 2.5%, while 1- and 5-year expectations remained stable. Consumer uncertainty about future inflation is also growing, particularly among lower-income households who are noticing rising prices. Really, they're just noticing it. Not that their grocery bill is like gone up by a third or half. The survey showed disagreement across respondents, with a significant number of expecting either a drop or zero inflation or a doubling to 6% in the coming year. So half think it's going to be none, and the other half think it's going to be 6. So it's just, wow. Home price growth expectations ticked up to 3.1%, the highest since May, and could surge further if the Fed cuts rates. Other price increases were noted as gas 3.6%, rent 7.3%, and Medicare 8%. However, food and college education saw modest declines. Despite a slight increase in household income expectations, 3.1%, concerns over rising delinquencies grew, with delinquency expectations reaching their highest level since April of 2020. Household spending growth remained elevated at 5%, well above the pre-pandemic levels, raising concerns about sustainability amid record low savings and high credit card debt. Labor market expectations were mixed, while 1 year ahead expectations earnings growth rose to 2.9%. Unemployment expectations increased slightly, and the perceived probability of finding a job decreased. However, fewer people expected to lose their job or voluntarily leave in the next 12 months. This data points to a mixed economic outlook, with inflation and employment both showing uncertain trends. All right, so everyone's feeling really positive about the future, right? Excuse me. All right, one last article here comes from our buddies over at First Trust, Mr. Brian Westbury, his Monday Morning Outlook article. This one's called Slower, Faster. So let's see what Brian had to say to wrap things up here. Friday's employment report suggests the U.S. economy may be slowing down faster than expected. Non-farm payrolls rose by 142,000 in August, but revisions to June and July brought the net gain down to just 56,000. A more concerning measure, excluding government, education, health services, and leisure and hospitality, showed an increase of only 25,000 jobs in August and just 31,000 in the past 3 months. Government jobs are not real jobs, they're welfare. Government and education and healthcare jobs, sectors heavily influenced by government spending, have accounted for 37% of the job growth since the pre-COVID peak in February of 2020, and unusually high share. Civilian employment, which includes small business startups, saw a gain of 168,000 in August, but this measure is down by 66,000 jobs compared to a year ago, with full-time employment falling by 1 million and part-time employment rising by 1.1 million over the same period. In addition, the Labor Department recently revised down payroll growth by 818,000 jobs for the year ending March 24th. While the adjustment still leaves a gap, it may be closed through further revisions or population growth due to high immigration. Yeah, bringing in illegals is not exactly the solution. Inflation measured by the CPI is expected to rise modestly by 0.2% in August, with the Federal Reserve's preferred measure, the Personal Consumption Expenditures Index, likely increasing by 2.3%. This slowdown in inflation is attributed to tight monetary policy, as the M2 money supply has been down 3.1% since peaking in April of 2020. While the Federal Reserve is likely to cut rates by 0.25% at its upcoming meeting, a failure to monitor money supply growth could risk a return to higher inflation and a harder economic landing. And something I was doing a little research earlier, and let me bring this up on the screen here. I was what was it on? Oh, it's on Twitter. I was doing some quick math or trying to determine here. Let's bring this up, make that big on the screen here. Because people are always crying and moaning about the price of homes going up so much. But, when you take the price of a home in relationship to the price of gold, this goes back to 1969. Your average price of home, really since the downturn after it's really peaked out in like 2000, 2001 around the dot-com bust. And then we had a huge downtrend through about 2011, 2012. Since then, home prices have been fairly stable here, really between $200 and $300 or 2 and 300 ounces for the average price of a home. So home prices haven't been going up the last 10 years. If anything, they've been very, very stable in relationship to gold. And I also did this for silver. Peaked out again at about the same time, about 50 ounces of silver for your average home in, what was that, about 2002, 2003. And, then we had that big fall. And then, again, really, the last 10 years, very, very stable, 20,000 ounces to maybe 25,000 ounces has been the range here for the better part of a decade. And, to show it against another commodity, barrels per oil, or how many barrels of oil for the price of, or for the average single family home. And same thing, peaked out around 2000. And, it's a little more volatile because oil prices do fluctuate a lot more than precious metals. But again, between really the last, 7 to 10 years, we've been between, 6,000 and about 10,000 barrels for an average home. So again, these people like to tell us that, everything is getting more expensive, but it's not. It's our money, our currency that has been devalued so greatly over the last, really in my lifetime, since we've gone off the gold standard a couple of years before I was born. So, again, it's not corporate greed. It's not anything, it's your government and the Federal Reserve that is reducing your buying power and really screwing you over. So anyways, all right. Well, that's everything that I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. That's where you get all your financial planning needs, plan for your retirement. If you're dumb enough to send your kids to college, I can help you, save up enough money for that. Whether or not it's buying that new home, saving, starting a new business, whatever it might be, give me a buzz. I'd be happy to help you out. All right. Well, I hope everyone has a wonderful evening, and I shall be back again tomorrow, hopefully, unless the world ends. And I'll talk to you guys next time. Adios.